Welcome to Matters Financial and Geopolitical from a Frontier. I trust you had a great weekend. Mine was glued to the screens, listening out for people's comments, which never seem to turn up, but let's get to that in a moment. I thank CCTV, Linda Matongana, for the interview on the weekend about Brexit. This morning I had an interview with the BBC World Service about the same thing, but they wanted to focus in on the tea component of the Kenya-UK relationship. And then I also thank Bonnie and George Durangu for the interview on CNBC that was earlier today as well. I rather like the photograph that I got someone to take on my behalf, Brexit in the background. Macro thoughts. The FX market witnessed on Friday a 10 sigma movement. That's Javier Blas. He posted this image to confirm that. Hunsader, Eric Scott Hunsader, currency pairs, this is going back to Friday again. Last evening, note the waves as more and more bet on Brexit. Then most active futures worldwide during Brexit timescale is in hours and minutes since 1800 Eastern Time. Again, Eric. And then he adds the VIX futures to the previous chart. Have a look what he comes up with. Black Wednesday times 2 was the size of the move that we saw on Friday. Biggest fall on record, and twice the 4.2% fall on 16 September 1992. There is a grave danger of further weakness in the weeks ahead. This is Societe Generale strategist Kit Jukes. Indeed, the view of policymakers will be that a weaker pound is a vital economic shock absorber. The moves dwarfed falls on Black Wednesday in 1992. The word unprecedented is often used too much, and people often reach for the hyperbole, but this is truly unprecedented, said Stephen Major. HSBC cut its forecast for the pound to $1.20, and several other banks said they expected the value of the British currency to fall further. Sterling stood at 136.16 by late afternoon on Friday, up from a low of 132.28. Its weakest level since mid-1985. It's now at 134.36. I'm one of the people who was here at the time we were trading at 135. It's back to the future. We're back to where we were in 1985. We've had a 10% decline in 6 hours. That's simply extraordinary, and a vote to leave provides an existential crisis for Europe. My piece over the weekend was headlined Brexit puts Africa on the back burner. At 4 o'clock last Thursday afternoon, a Citizen TV journalist came to interview me about Brexit. I showed her the prices. Sterling had just touched 149.50, its highest for the year, and Ladbrokes was offering 4-1 on a Brexit, which in a 2-horse race is as rank as a rank outsider gets. I woke up in the middle of the night because these are the days in the markets where if you snooze, you lose. Checked levels, and sterling was fast coming off the boil. And the prediction markets were now 50-50 from 1820. If I told you I was short the South African rand, crude oil, and long gold, and had been stopped out just a few hours before and ahead of what were the most violent moves I've ever seen, and I needed to be the comeback kid in those early hours, and I was. But I digress. The markets are the message, and they tend to serve a very clear signal. By 5 a.m. it was clear there was no coming back. Sterling, which had touched 149.50 on Thursday, now reached 132.28, its weakest level since 1985, before recovering a little to close Friday at 137.65. The move was more than 2 times the previous biggest fall on record, Black Wednesday 1992. HSBC, as I said, cut its forecast for the pound to 120, which is just slightly less than my prediction of $1.25 from June 13. What is certain is that utility rebounds in the pound for now. We've had a 10% decline in 6 hours. It's simply extraordinary. And a vote to leave provides an existential crisis for Europe. Is Brexit. The Brexit business is a time bomb under Europe, in my opinion. And where Le Pen is talking up a Frexit, and Wilders is already talking about a Nexit. Prime Minister Cameron, whose promise from 2013, made largely to stem a rebellion, the right of his party, has been upended. Politics is a sport that is red in tooth and claw, because one day you're winning a majority in Parliament and the Prime Minister, and the next you're upended by Boris Johnson and Nigel Farage. Asked why she thought the Leave camp had won the referendum, she said all that mattered on the doorstep was immigration. It was 2 fingers up to the establishment, according to The Guardian. In fact, in my view, a very unpleasant advertisement that Farage put out with queues of brown and black faces all queuing to get into the UK probably was responsible for Brexit pulling 4 percentage points ahead. Polls showed that 73% of people under 25 voted to stay, while 60% of people aged over 65 backed to leave. What happens next is anyone's guess. EU Commission President Jean-Claude Juncker said he doesn't expect an amicable divorce, while German Chancellor Angela Merkel repeated her desire to avoid ugly negotiations. Moody's lowered its outlook on Britain to negative from stable last night, referring to heightened uncertainty. You could say that again. What about Africa? What about Kenya? Some folks are speaking of the renaissance of the Commonwealth. The point is that the United Kingdom has to renegotiate with all these European countries individually. Will they have any time for anything else, I wonder? I agree with that other comment. I think the pound is said to be the shock absorber. Carney is going to cut rates, maybe as early as today. UKIP leader Nigel Farage tells me, this is a quotation I found on Twitter, Mark Carney may have to resign as head of the Bank of England for being too partisan during the referendum, and that will add more uncertainty into the mix. Finally, have a look at the current account deficit, because the UK needs international investors to fund this. I'm a bit concerned with gilt yields at all-time lows, the pound's looking as if it can still go softer. It's going to be difficult to fund this current account deficit. Let's go back to home thoughts. I've spent hours failing with remotes for many reasons, but this one makes all those disappointments palatable. David Yarrow. Beautiful photograph of an elephant. Camilo Jose Sella says humanity has pretty much come unhinged. I think we can all agree with that. I like this photograph of the Hagia Sophia that was tweeted, and we actually visited in there, and it's a remarkable place, both a church and a mosque. T.S. Eliot, time present and time past are both perhaps present in time future, and time future contained in time past. Political reflections. Tory MP says number 10 should have had a Brexit plan. This is a report from Sky News that apparently no one has thought about the day after. No need to write, David, impatient EU tells Cameron. As I said, the extraordinary thing is that one day you could be the Prime Minister with a majority in Parliament, and the next, oh my goodness, you are appended by Boris and Nigel. EU calls for a new British Prime Minister in days. This is a remarkable situation, isn't it? You say you're going to resign in 90 days, and now there is pretty much a vacuum. Finally, we can stand proud as a sovereign nation, respected by our neighbours. Can Leave take control of its promises? Asked Sky News. Doesn't look like it. This is the advert I was talking about that moved the dial big time. This is the Farage advert with the queues behind it. Boris Johnson and Michael Gove prepare a dream team to lead a Brexit government, says the Telegraph. Asked why, with polls showing that 73% of people under 25 voted to stay, 60% of people aged over 65 back to leave. Many demonstrators complain their voices have not been listened to. Sources close to Boris Johnson say he was extremely upset by David Cameron's resignation and felt personally responsible. Well, indeed he should. And then I like this photograph. Nach dem Referendum für Frankreich heißt es EU Relaunch oder Fright. Imran Garda tweeted, usually the epitome of positivity. I've never heard Tony Blair so devastated. I like this link of President Maduro making a speech that I found. Holger asks, is the unthinkable unpriceable? Investors should consider President Trump or Euro breakup, both, I think, remain with some likelihood. The inconvenient truth, Assad's popularity confounds NATO propagandists. Been doing this successfully for a while. Bashar is an Alawite. His wife Asma is a Sunni, and most of his army is Sunni as well. And they make a point of showing solidarity with Syria's Christian community. If Bashar were a war criminal, he would not have the support of his people, and Syria would not have been able to hold off against externally funded forces as it has done for 5 years before the Syrian war. Bashar al-Assad was the most popular leader in the Arab world. Polls show that Bashar still has the support of the majority of Syrians. The Obama administration and the al-Saud rulers have had major disagreements about the Syrian crisis, said Cafiero of the Gulf State Analytics. You can say that again. Interesting piece in foreign policy about Xi Jinping and Vladimir Putin. Xi remains the only world leader of a major country that Putin can call a friend. Putin is arguably the foreign leader with whom the Chinese president gets along with best. Talking about where they met and how they connected, whether this pivot by Russia to China is helping or not. Fallujah, the resistance city, is liberated yet again for the 4th time in a decade, says Robert Fisk. Let's move on to currency markets. Let's move on to international markets. Black Swan Playbook by Christopher Lankner, Bloomberg Gadfly. Britain's vote to leave the European Union is shaping up as a Black Swan event. I think he's right. Help me out. What happens next here? Asks David Inglis regarding the S&P 500. Conveniently puts up a chart as well for you to look at. Let's move on to the currency markets. Euro dollar 110.67, dollar index around 96th level, Japanese yen 102.13. I saw a headline where Abe is talking about intervening. Swiss franc 0.9752, the pound 134.11, the Aussie 0.7440, strong rebound now. India rupee 67.905, South Korean won 1182.61, the Real 337.33, Egyptian pound 887.92, and the South African rand, last time I checked, 15.25.41. Put up a 3-day chart of the yen, that's excluding this morning, but you get an idea of the extraordinary moves that we've seen in it. I'll also put a chart that Holger put up earlier this morning. Sterling drops further in Brexit fallout. I think it's still a sell because of this uncertainty around who's in charge, what's happening, who's going to pull the trigger. Euro dollar, we've had a little push higher, 110.65, but I think parity is now back on the table. Let me put up a 3-month chart for you. Gold, which has been on a very strong run of late, last trading at 13.25, and I think the target now is 1400. Crude oil getting a little bit of a bounce this morning in pre-market opening. I'll put up a 1-year chart for you to take a look at. I think I see it going back down to around the 45 level. Let's move on to Africa. Dollar shortage highlights Zimbabwe's deepening economic woes. This is an article in the FT. In nearby shops, retailers warn that the scarcity of dollars, the dominant currency in the import-dependent nation, will soon start to show on supermarket shelves. Authorities this week imposed restrictions on the import of a range of goods, from bottled water to fertilizers, canned beans, while local businesses complain of not being able to pay suppliers. We are in classic headless chicken territory, says a banker talking about. It's very interesting. It's on the website if you're interested in reading it in full, rich wrap-ups, because I know it's difficult at times to get in through the paywall of the Financial Times. After a year of political turbulence and a failed coup, the Independence Day will be celebrated in dignity in Burundi, says Ambassador Albert Shapiro, and posts a photograph of the president and his wife. East Africa braces itself for implications of UK-EU exit vote on economies. This is the East African. Likelihood of recession in the UK will affect exports from the region. Investment will slide. Volatility in global financial markets could trigger capital outflow. According to Razia Khan, the turmoil in global financial markets as a result of the UK's leave vote would increase pricing for bonds, making it difficult for regional economies to access international capital markets for funding. Trade experts and economists in the region say Britain's decision to exit the 28-member EU would distort existing trade pacts and call for fresh agreements. African assets slumped on Friday as Brexit vote triggers commodity decline. South Africa's benchmark share index fell the most since May 2010. South African government bonds fell the most since March. Kenya's benchmark equity index ended 1.8% lower, biggest drop since October 15. So we had a tough time. Congo's Kabila problem, how Washington can get the president to step down. This is an article in Foreign Affairs. A lot of pressure building in the US to get him out. Greater risk with Congo is that any instability could trigger regional turmoil. Congo borders 9 other countries. Africa's World War, a messy conflict that erupted in 1998 along the Congo-Rwandan border, ended up engulfing the Great Lakes region and involving the armies of 8 African countries. An estimated 5.4 million people died during the conflict, mostly in eastern Congo. So far, the United States has failed to put the right sort of pressure on Kabila for his destructive behavior. Words are not enough. Congo, dubbed a looting machine, is estimated to lose up to $4 billion per year from government manipulation of mining contracts and budgets. The immense gravy train that results from shady deals between Kabila's administration and its commercial partners, as well as the diplomatic immunity that comes with being in office, makes it very difficult for leaders to relinquish power. To get Kabila to hold elections on time and adhere to Congo's constitution by stepping down at the end of the year, the Obama administration, led by its able envoy Tom Perelio, should target a number of Kabila's financial vulnerabilities. Interesting article. And now we learn that one of Kabila's henchmen, the fellow in charge of the police force in Kinshasa, has been sanctioned. South African oil shares up 1.94% year to date, fell 3.56% on Friday. Dollar rand, I'll put up a 6-month chart that goes back to lows seen earlier in the year. Egyptian EGX 30 slumped 5.54% on Sunday. That's now down 2.2% year to date. Nigerian oil share up 7.01% year to date. That's on the back of the move finally to devalue the naira. Ghana Stock Exchange down 10.99% this year. IMF staff concludes visit to Mozambique and issued a press release. Let me read the pertinent part. The mission agreed that recent initiatives to investigate the previously undisclosed debt through the Attorney General and a Parliamentary Inquiry Commission are important steps to restore confidence, though it stressed that further measures are needed, in particular an international and independent audit of Maputo, Pro Indicus and MAN companies would be needed, the latter two being the companies that received funding under the previously undisclosed loans. Further progress in the effective implementation of both the corrective macroeconomic measures and measures aimed at strengthening transparency, improving governance and ensuring accountability would pave the way for the resumption of programme discussions at a later stage. So they're not coming in to help at this point in time. I was in Maputo 759 days ago at an IMF Government of Mozambique conference called Africa Rising. I took a photograph of the poster and I tweeted Africa Rising, but no longer in the rising tide floats all boats way it was in 2012 and 2013. Angola lines up $1 billion of new loans. This is a report in the Wall Street Journal. Goldman Sachs arranging a syndicated loan, partly guaranteed by the World Bank, while London investment firm Geopolitical Capital separately providing dollar financing to the country to import food, medicine, and other necessities. People familiar with the loans said they're in big trouble. Hong Kong has overtaken Angola's capital to become the costliest city in the world for expats, according to Mercer's annual survey. East Africa will feel Brexit blowback. This is an interview I gave to the Voice of America. I said Sub-Saharan Africa will feel the economic reverberations of Britain's exit from the European Union. East Africa region with a strong British colonial legacy will feel blowback from Brexit. It's very difficult to model because we're now in a very disruptive, fast-moving, fluid environment. No one knows exactly what's going to happen. And I think that naturally is going to lead to a slowdown in business and possibly investment. So yes, I think East Africa is part of the collateral damage. I talked about Safaricom being the biggest company here in Kenya, 40% owned by Vodafone. Biggest brewery company, EABL, majority shareholders, Diageo, which is UK-based. We export a lot of fresh vegetables. If you ever take a walk around a supermarket in the UK, you'll find a lot of Kenyan wares up for sale. So strong relationship that's been there for eternity. Ex-central bank boss says the collapsed banks could have stayed open. Well, the last 2 quarters, he said, of 2015 were extremely difficult for the economy, and it was also a devastating period for banks due to low economic activity and tight liquidity. When there is low economic activity and tight liquidity, banks suffer, and medium to small banks suffer the most, he said. Data from CBK shows that the ratio of gross non-performing loans to total loans rose from 4.6% in June 2015, probably being underreported at that point, to 8.2% in April 2016. The CBK and Kenya Bankers Association should have held discussions to see the crisis through, as it was mostly exogenous to the sector. That's a good way of putting it. Kenya shilling 101.257. Nairobi all share at a 4-month low, down 2.55% this year, fell 1.63% on Friday. NSE 20 at a 47-month low, down 8.27% this year. If you need to check into any listed share, there's a link at the bottom of Rich Wrap-Ups. And then finally, to sign off with the fact that Kenya aims to cut the size of the Somali refugee camp by about half by the end of 2016. Then we put up a photograph that Reuters Africa kindly uploaded of the Dadaab refugee camp. Trust you have a great week. Thanks again for stopping by.